Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Well, when we talk about aggressive growth stock picks, we have to consult with Bill Wilton because he's our aggressive growth stock strategist at Zacks.com. So we look to him for the answers in this particular style of investing, at least when it comes to stock picks. And he's come up with a couple here that one would be recognizable to you, one wouldn't be. We'll start with the one that wouldn't be. Biglari Holdings, BH the ticker. Now, I'm assuming it wouldn't be recognizable to the average person, but...
Yeah, that's not a name that's very widely known, but one of their biggest assets is a nationally recognized brand name, and that's Steak and Shake.
Yeah.
There's about 500 locations across the country. They also own about another 100 or so restaurants under a variety of other brand names, as well as other investments, but the Steak and Shake is what they're best known for. They reported quarterly results on August 13th, and it was actually a really great quarter for them. Their net income more than doubled to about $8.7 million, which led to earnings per share of $6.23, well ahead of the estimates, calling for $2.66. So shares saw a nice boost on that. Not only were the earnings higher and the revenue was higher, but their same-store sales were also up across the Steak and Shake franchise, which is something that a lot of analysts are making sure that we're seeing, because just trimming your costs isn't enough to get people really feeling good about a stock. You need to know that their revenue sources are improving as well.
Right.
They eventually became a Zacks #1 rank after analysts went ahead and upped their earnings guidance for the next couple years. Based on, like I said, the higher same-store sales numbers and the success they're seeing from the previous acquisition of Western Sizzlin', which is another restaurant chain. This 5-year chart here tells kind of the story of our economy right now. You see the full-year consensus estimates tapering off into the heart of the recession, but bouncing back convincingly. And right now, that's exactly what we're seeing here. So things are moving in the right direction. The estimates can be a little bit volatile, but as long as they're pointing to the upper right, that's a good sign.
And the other stock that you've written about recently in this category, Wyndham Worldwide, WYN. And of course, most people would know they're in the hotel business. Yeah,
they've run under brand names such as the Wyndham, Ramada, Days Inn, and several other brand names that are pretty widely known. They've got about 7,200 locations worldwide, and that in addition to about 3.8 million members of their rental and exchange program, where people can, swap timeshares, rental homes, things like that.
Oh, I didn't know that they were into that.
Yeah, so that's in addition to their hotel exposure. They saw net income jump 34% in their most recent earnings report. The other great thing that they did is they provided an optimistic outlook, raising their guidance for both revenue and net income, which is, the telltale sign that they're feeling good about their upcoming future. Another thing that was kind of surprising is that the hotel industry is actually the 33rd ranked out of 264 on Zacks.com. So it's a fairly hot industry right now, and Wyndham is the top-rated hotel in that space. They've got excellent comparables when it comes to return on equity and profit margins. The one thing, since I have written about them, the shares have tapered off a little bit with the general market weakness. But if you're willing to be a little bit aggressive here, this could be a very excellent entry into this stock. They're at their pre-report levels and could see a nice little bounce back there.
Any idea why that hotel industry is so high up on the rank list?
It's hard to say. It's one of those things that when you think about the macro sense, you're going to make certain assumptions, and a lot of people would say hotels got to be bad, the consumers are hurting, they're a little bit more cautious, but the numbers aren't lying. Estimates are rising across the industry, and their comparable numbers are doing very well. So it's one of those anomalies.
Might be an interesting story there, Bill. Do you own either of these two?
I do not.
All right. Well, if you want to check out more Zacks Rank Buy stock pick ideas for yourself, go to Zacks.com's homepage, because we put 4 new ones up there for you each business day. One in each of the investing categories that we write about. Bill's included, aggressive growth. With Bill Wilton, I'm Terry Ruffalo.